Bitcoin Treasury Companies. They're corporations that are specifically designed to buy and hold Bitcoin. And right now, they're the hottest thing on Wall Street. It seems like all the cool kids want to have their own. And it's no secret why either. The values of these things have been skyrocketing. Since 2020, when Michael Saylor turned his company Microstrategy into the first Bitcoin Treasury Company, its stock price has increased 29-fold.
Going up, going up.
In that period, it's more than even Bitcoin. So what's going on here? Is this a genius feat of financial engineering that some people say it is? Or is it just another slop of snake oil that the financial system is pushing onto retail investors? If you know me, you know I've been skeptical of Bitcoin Treasury Companies for a while. But after I saw a certain amount of gains, I needed to take a closer look. So I dug in deep, like Christian Bale in The Big Short. Specifically, I focused my research on Microstrategy, the granddaddy of Bitcoin Treasury Companies. And what I found shocked me. Microstrategy appears to be one of the biggest legal financial grifts of all time.
It's a scam. It's a scam. And I refuse to be scammed.
And before I explain why, let me say one very important thing. For the sake of this video, I'm assuming Bitcoin is completely legitimate and will continue to grow rapidly in value over the long term. If you're one of those people that hates Bitcoin or thinks it's a scam or a Ponzi, one, you're wrong, and I strongly encourage you to take a second look at it. You can do that by reading my book about Bitcoin. I'll put the link in the description below. And two, if you really think that, then you don't even need to be watching this video in the first place. Bitcoin Treasury Companies like Microstrategy buy and hold Bitcoin. If Bitcoin goes to zero, then all the Bitcoin Treasury Companies will become worthless. End of story. I just saved you 15 minutes.
You're welcome.
Okay, now that we've got that out of the way, let's start. We're going to start this deep dive on August 11th, 2020. No, not because I want to reminisce about COVID and being in lockdown again.
In your Instagram post, you're not wearing your mask.
I'm so glad masks are over. But we're starting on that date because that's when MicroStrategy officially purchased its first 21,454 Bitcoin for a grand total of $250 million. That purchase made MicroStrategy the first publicly traded company to adopt Bitcoin as its primary treasury reserve asset. And if you ask me, that was a genius move by Michael Saylor. He saw that Bitcoin was the future, realized that he was sitting on a bunch of dollars, and said, hey, I'm going to trade these dollars, which are going down in value, for Bitcoin, which is designed to go up in value. This was great. All around, hats off to Saylor for having the cojones to do this, especially since his average cost per Bitcoin was only around $11,000 at the time. Now, the average price per Bitcoin is over $100,000. So that was a huge win.
That was awesome.
And this is where things start to get a little interesting, because at this point, MicroStrategy had essentially turned itself into a proto-Bitcoin treasury company. And now investors needed to figure out the right way to value it. Before Saylor adopted Bitcoin, MicroStrategy was more or less a normal software company whose valuation fluctuated between $1 and $2 billion. But now that they had Bitcoin on their balance sheet, normal valuation metrics like profit and earnings weren't as helpful because Bitcoin was growing much faster than MicroStrategy could make money. Investors needed a new metric to figure out how much MicroStrategy should be worth, and so they created one called MNAV. MNAV stands for multiple of net asset value. And all it is the market cap of a company divided by the market value of all of its Bitcoin holdings. So, for example, if the market cap of MicroStrategy was $2 billion and the total value of all the Bitcoin they owned was $1 billion, then the MNAV would be 2, meaning that anyone buying MicroStrategy shares would be paying $2 to purchase a stock that was supported by $1 worth of Bitcoin. Likewise, if the market cap of MicroStrategy was $1 billion and the company held $2 billion worth of Bitcoin, then any new investor would essentially be buying Bitcoin 50% off because 1 billion divided by 2 billion is 0.5 or 50%. That would be a pretty good deal. And for the MicroStrategy stock, it consistently traded at an MNAV above 1, meaning investors valued the company higher than its Bitcoin holdings alone. And back in 2020, when MicroStrategy first became a Bitcoin Treasury Company, that made sense. Sort of. MicroStrategy still had its software business, which was delivering consistent profits. And they were able to take those profits from the business and continuously purchase Bitcoin with it. This meant that the Bitcoin per share of MicroStrategy stock was accretive, Or to say it another way, the amount of Bitcoin underlying each stock was increasing. If you wanted to calculate the fair value of MicroStrategy at that point, it would have been equal to the value of the original MicroStrategy software business, plus the value of the Bitcoin it owned, minus a discount for risk. And if we look at this equation, we see that if you value the software business more than the risk discount, then it makes sense that the MNAV would be higher than 1.
Makes sense to me.
However, this setup changed by December 2020. At that point, MicroStrategy had essentially run out of all of its available cash reserves. And even though they were making money, they weren't generating the profits from their software business that they needed to buy the amount of Bitcoin that they wanted. They needed to find a way to get a lot more money.
Money, please!
And they found their solution in a complex financial instrument called convertible debt. And stick with me here, because convertible debt can be a little confusing, but I'm going to break it down for you in a super simple way. In convertible debt, a company like MicroStrategy can borrow money from a lender, pay interest on that debt, and at an agreed upon time in the future called the maturity date, the lender can decide if they want their debt to be paid back in dollars or if they want their debt to be paid back in stock valued at a predetermined price. To explain it another way, convertible notes allow a lender to have their cake and eat it too. If the stock lowers, then the lender will be able to make interest from the loan and recoup their original investment. But if the stock price increases, then the lenders can generate a huge amount of profits because their debt will be paid back in new valuable shares. And the key point here to understand is that with convertible debt, the debt value that has to be paid back isn't a fixed number like you might imagine with a credit card. It scales up with the increased value of the stock. So anyway, MicroStrategy decided to raise convertible debt to buy Bitcoin. And right now, we're going to walk through the details of that first raise together. MicroStrategy borrowed $650 million through convertible senior notes. Senior here just means that if MicroStrategy goes into bankruptcy, the people that lent the money get first dibs on all of MicroStrategy's assets. This includes all of their Bitcoin. Think of it as extra downside protection for the lender. The interest on this debt was 0.75%, meaning that every year, MicroStrategy had to pay the debtors a total of $4.8 million in interest. The maturity date of this debt is December 15th, 2025. That's coming up. And the post-split conversion price was $39.80. And all this means that if you lent MicroStrategy $100 as part of this raise, you would have collected 75 cents in interest every year, and at the maturity date, you would get whatever is greater between $100, which is the original amount you owned, or 2.51 shares of MicroStrategy stock, because 100, your original investment, divided by $39.80, the conversion price, is 2.51. And because at the date of this recording, MicroStrategy stock is about $380 per share, it means that you would get MicroStrategy stock worth approximately $953, which would make your returns about 957%. Not too shabby. So this seems like a really good deal for lenders. And maybe now you're thinking that you want to lend MicroStrategy some money for their next raise. Too bad. Unlike stocks, these convertible notes are not available to the public. If you want to take part in this game, you have to be a qualified institutional investor. And to get into that category, you have to be managing at least $100 million in securities.
How much?
That's a little rich for me. But let's think about this convertible debt for a second. What's the point of MicroStrategy taking all this debt if the amount they have to pay back scales up as the price of Bitcoin and MicroStrategy stock increases? That's a great question. And if the value of MicroStrategy stock kept an MNAV of 1, then this whole exercise in financial engineering would essentially be pointless. Because however much Bitcoin grew by, MicroStrategy's debt would grow by the same amount, and MicroStrategy would actually lose money in the interest they paid to its lenders. But here's the thing. If Michael Saylor and MicroStrategy can convince the public to value the company at an MNAV greater than 1, then the lenders will choose to be repaid in stocks instead of cash, thereby offsetting the debt load to retail investors who are essentially subsidizing the loan repayments, allowing MicroStrategy and Michael Saylor to profit from the arbitrage. And the higher the MNAV that Michael Saylor can convince the public to value MicroStrategy stock at, the more MicroStrategy and the lenders will both profit. So if we break down the winners and losers from this raise, it's pretty simple. The big winners are the lenders because the MicroStrategy stock has skyrocketed. MicroStrategy, the company, and the early investors because they were able to acquire all this new Bitcoin and have it be heavily subsidized by the public markets. And the losers are the new retail investors, the ones propping up the MicroStrategy price who are paying for a Bitcoin-backed asset and valuing it at a level much greater than the underlying Bitcoin. And what's really interesting here is that this convertible debt fundamentally changed the business model of MicroStrategy. Before, the business model was simple. Sell software that delivers a profit and use that profit to buy Bitcoin. This is straightforward, ethical, and forward thinking. But after, the profits from the MicroStrategy software became significantly less important. Now, the core business of MicroStrategy was to create hype for its stock. They now had to convince the public that it was more valuable than the underlying Bitcoin. And the more they could do this, the larger the MNAV would be and the more money the company would make. And if you ask me, this is where MicroStrategy turned into a grift. Their core product was no longer software. It was a stock itself. And their stock essentially turned into a giant game of hot potato.
Oh, so it's like a hot potato.
As long as they can keep the stock price up and investors are willing to value the company at a high MNAV, retail investors will keep seeing gains. But as soon as the general investor public gets bored with MicroStrategy stock and moves on to the next big thing, which they always do, then that MNAV premium is going to be washed away. And the MicroStrategy stock is going to trade a lot closer to its fair value, and the retail investors are going to be the ones holding the bag. Now, I want to go back to fair value again. Remember, the equation for fair value is the original software business plus its Bitcoin minus a risk discount. Next, let's take into account that the original software business for MicroStrategy is not a high-growth company. Most people would consider it stable at best. This means that from a mathematical standpoint, we can think of it as a constant. So as Bitcoin grows, which it probably will, the weight of that business in the equation will trend lower, meaning that in reality, MicroStrategy's fair value will essentially just be its Bitcoin minus a risk discount. And that leads me to my next topic, the risk discount, because there's a lot of different risks here and we need to talk about them. So let's list them out. Stock dilution risk. Will MicroStrategy create more stocks diluting the Bitcoin per share? Liquidity risk. Does MicroStrategy have all the Bitcoin they say they have? Some Bitcoin Treasury companies try to reassure the public by sharing their private keys. MicroStrategy specifically does not. Counterparty risk. What are the chances that MicroStrategy loses some of its Bitcoin, whether through negligence, fraud, bankruptcy, or something else? Redemption risk. This is the fact that just because you own MicroStrategy stock, it doesn't give you any rights over the underlying Bitcoin. Regulatory risk. What are the chances the government will decide to take MicroStrategy's Bitcoin or that they just want to tax them in some special way? And finally, unknown risk. What if something completely out of the blue shows up that no one ever expected? And the way you calculate risk discount is by saying that you acknowledge all of these risks with MicroStrategy, so you want to discount it at a certain rate or percentage. So, for example, if you believe the discount rate is 5% and MicroStrategy's Bitcoin holdings are worth $100 million, then the risk discount would be $5 million because 5% of 100 million is 5 million. And the key point here is that eventually, as the risk discount increases with the amount of Bitcoin MicroStrategy owns, then the risk discount will eventually be greater than the value of the original software business, making the fair value less than that of MicroStrategy's Bitcoin holdings and the MNAV less than 1. And that won't be good for the retail public.
Oh, that's not good.
For MicroStrategy, though, all of this didn't really seem to matter. And only a few months after their first convertible debt offering, they did the same thing again, raising another round of convertible debt to buy 19,000 more Bitcoin at an average price of around $52,000 each. And the details of this raise were a little different, but the overall structure was very similar.
It was basically the same thing.
And for a while, it seemed like MicroStrategy was going to continue with this convertible debt strategy, But eventually, the general market sentiment changed, which made issuing more convertible debt less attractive. And this economic environment allowed MicroStrategy to invent its second financial engineering scheme to acquire more Bitcoin, the MicroStrategy ATM. ATM, or at-the-market offerings, are actually quite simple. All that happens is that MicroStrategy sells new shares to the public and uses the proceeds to buy more Bitcoin. So let's walk through this first ATM offering from November 2024 in detail. MicroStrategy issued approximately $2.03 billion worth of new shares and used the proceeds to buy 27,200 Bitcoin at an average price of $74,463 per Bitcoin. And at the time, the MNAV was about 3, meaning that if you bought these new shares, you were essentially paying $3 to buy an asset that was backed by $1 worth of Bitcoin. For existing shareholders, this meant that their percentage of ownership over MicroStrategy got diluted as the supply of shares increased. But that was okay because all of the new money was used to buy Bitcoin, which meant that even though they owned a smaller percentage of MicroStrategy, MicroStrategy now owned a larger amount of Bitcoin. And this begs the key question: who won and who lost in the ATM offering? And the answer is simple. Existing shareholders won and new investors lost. Or to say it another way, the MicroStrategy ATM is a financial scheme that is designed to increase the Bitcoin per share of older investors with funds from new investors. And as soon as the pool of new investors dries up, the entire scheme will begin to unravel. Why does this sound so familiar?
It's not a pyramid scheme. It's not even a scheme per se.
Oh, that's right. It sounds awfully like a pyramid scheme. Now, to be crystal clear, because I really don't want to be sued, based on all the research that I've done, I didn't identify any actions that were illegal from MicroStrategy or any other Bitcoin Treasury company. Furthermore, as long as MicroStrategy and all the Bitcoin Treasury companies have the Bitcoin that they say that they have, it's pretty much impossible for them to go to zero. However, based on all this information, to me, it looks like a collapse to fair value is almost inevitable. And when that happens, the vast majority of retail stockholders will see their net worths plummet in Bitcoin terms. So, with all that said, here's my final verdict. The way MicroStrategy started with using profits and existing cash reserves to buy Bitcoin was completely legitimate and in my eyes made them one of the most desirable stocks on the market. But as soon as they started transitioning to convertible debt and ATM offerings, things started to get grifty. Their business model changed from a normal company that offered real products and services to a hype machine that was incentivized to focus on getting retail investors to pay a premium for their stock. And they did this by creating what was, in my opinion, an entire niche industry of influencers, pumping the company, making it sound like it was a sure thing, and obfuscating the truth that in reality, it's just paying $2 for something that's worth $1.
It's quite simple, really.
And what's crazier is that because of the success of MicroStrategy, now we're seeing a lot of Bitcoin Treasury Company copycats like 21 Capital, MetaPlanet, Nakamoto, and more. And all of these work on essentially the same principles. So are these companies breaking the law? Personally, I don't think so. But if you ask me, they're just all modern day snake oil salesmen. Okay, you guys, that's my breakdown of MicroStrategy and Bitcoin Treasury Companies. Let me know what you thought in the comments. Do you think I got it right? Or do you think that I got something wrong? I want to know. If you liked this video and appreciated the in-depth breakdown, give it a like, please share and subscribe. And let me know if there's another topic that seems fishy that you want me to investigate. I had a lot of fun putting this together, so maybe I'll research your topic next. That's it. I'm out.